This AI stock is down 30% from where it was just 3 months ago, and it's set to explode. I'm going to show you how I'm investing big in this. And if it gets back to where it was just 3 months ago, I'll double my investment. I'll show you exactly how I'm going to do it in this video. Be sure and hit the like and subscribe button down below. Let's get the video out to as many people as possible. Also, download the free options workshop in the link below. It talks about the two main benefits of trading options over buying stocks alone outright. There's also a paid course if you want to dig into the options a little bit deeper. Use the link below and open an account with Moomoo. You can get 8.1% on uninvested cash and up to 15 free stocks. You also get the free charting software that's great, and I use it every day. It's a zero commission online platform brokerage. Disclaimer, I'm not a financial planner and I'm not recommending trades. Please do your own research, and if you're new or learning options, I recommend you start small. All right, guys, the stock I'm talking about is Micron, and I'm going to show you a few articles. This one is from Harsh Chawan on Yahoo Finance. He's with the Motley Fool, and he talks about the stock being down 30%. It's a great time to buy this AI growth stock while it's incredibly cheap. It's evident there's 26% jump in the shares of the memory specialist so far this year. So they've already had a bit of a jump this year. However, it's 30% down since hitting its 52-week high just a couple of months ago. And it's the adoption of AI, artificial intelligence, in multiple end markets such as data centers, smartphones, and PCs that's going to push this stock forward. And memory does go through boom and bust cycles. However, right now the demand in chips means that they're left with more supply in their hands, leading to sharp declines in prices. That is the case when there's less demand. But right now there's more demand, and they're going to crush revenue and margin profits. So right now the demand is for the high bandwidth memory, HBM, and that's what's used in AI. And the HBM market is estimated to hit annual revenue of almost $86 billion in 2030 compared to $1.8 billion last year. Guys, that's huge. And that's a compound annual growth rate of 68%. So Android smartphones are sporting a 50 to 100% increase in DRAM. So Micron does both DRAM and storage. So DRAM and NAND. And it's used in these AI applications. Here's another one. Two growth stocks could start soaring after NVIDIA's quarterly earnings. So they're saying on August 28th, which is just right around the corner, it's next week. And that's why I'm buying this Monday morning. But that Micron could take off due to NVIDIA reporting good and showing growth going forward. So NVIDIA provides the GPUs, and it's for AI, artificial intelligence, and these data centers that are required for it. So Micron, its June earnings conference call, the management said the company expects to generate several $100 million in HBM, high bandwidth memory. So again, it's that HBM market, and the HBM market forecast is forecasted to generate $14 billion in revenue this year and $20 billion in 2025, up from $5.5 billion. So all kinds of articles. Here's another one. Two stocks down 51 and 43%. Same situation. It talks about data centers and the need for more. And right here, Micron, an AI stock that you should not miss. These stocks are popular for hedge funds. So yes, the hedge funds are buying it as well. And what happens when hedge funds pour more money into these stocks? They move up. And the AI demand is big going forward. So in addition to the NAND, analysts are bullish on DRAM. So the DRAM is what's used in those smartphones, and it's expected to increase in Q3 and Q4. And then the final, here's another Micron stock price target after post-earnings slump. So the fact that it was down after last earnings gives us a huge opportunity to buy right now, as this HBM just starts to take off. And Micron has been investing in their development and this HBM and spending a lot on capital expenditures. And that was part of the reason for the earnings being down last time and the stock dropping. But going forward, I think Micron is a no-brainer. Here is the Tasty Trade platform. I'm going to show you the trade that I'm putting on, but you can see the target price they have is 161. It's trading at 102 right now. Everybody's got it a buy. There's 2 that have a hold, but 30 analysts have it a buy right now. So it's expected to do very well going forward. If we go to the trade tab right here, and then we look at the table mode, and I'm going to go out 510 days. And what I'm going to do is buy a LEAPS option. So I'm going to click on that January 16th, 510 days. So a LEAPS option is a long-term anticipation security. So it's over a year out. And what I'm looking to do is replicate buying the stock. If we were to buy 100 shares of this stock at $102, it would be $10,285 for 100 shares. But we're going to click on this January 16th. I'm going to go to the 80, which is a deep in the money call, and I'm going to click on the ask, the buy for the call, because we're going to buy an 80 call. And it's going to cost us $37.10. That's for one option contract. But this option contract controls 100 shares. So you multiply that times 100, it's $3,710. But actually, we're going to do the mid price, $36.85. So we're going to control 100 shares of stock for $3,685, where it would cost us $10,285 to control those same shares if we were to buy the stock outright. Now, if we go to the curve mode here, we can see as the stock price increases, here's the max we can lose. So if for some reason there was a war and the stock crashed for some reason, or I don't think it will. I mean, look at where it is on the chart. It's down. The lowest it's been is what, 65. It's at well, I guess it could drop further, but it's not going to drop down to 70 down here. It's moving up right now. We've got kind of a flag pattern. We've got the 13 creeping up on the 50. And we had a little bit of a drop back last week, and that's why I think this is a great buy right now. And again, before that NVIDIA earnings. But we're at 103 right now. I don't think there's a huge risk for any downside, too much more, if any. But my point is, the most we can lose is $3,685. So if we were to own those 100 shares at $110,000, we could lose a lot more. So we're only going to lose a portion of this if it drops. But anyway, we're not going to lose. I'm confident it's moving forward. But as we get to this 117 price and move up, it's going to continue to do well. If we look at the chart, we were back here at the 157 range just back in June. So just a couple of months ago. Now, if we get back to that 157 right here, you can see up here, we make over $4,000 P&L at expiration, over $4,000 at 157. So that's 2x our 36.85 just by that move up to where it was in June. So there's huge upside, and we can double our money. That's how I'm going to do it. You hit review and send, and you place the trade. I'm going to do that Monday morning. Now, I want to show you one more thing that I'll probably do against this. So after I buy that call, for no additional capital, we'll clear that out. We'll go back to the table mode. Now I'm going to go out to, we could either go 27 days, or I'm going to go out to October, because when I get inside 20 days, I look to roll to the next month. So I'm going to go out to October, and I'm going to sell a call against it. So we still make money on that LEAPS as this moves up, but I can sell the 125. It's not going to go up to 150 all in one month. Most likely it could, but I can sell the 125, or actually we could even do the 130 for $146, and or we could sell the 125 for $228. We can collect $200 a month while we're waiting as this stock creeps up, and make it every month. We roll month after month, we roll our call out and sell a call against our LEAPS option. We don't put up any additional capital because we have that LEAPS option on. So we just do that. We hit review and send. $231 is deposited in our account. So it reduces the price of that LEAPS option. So if we actually have the January LEAPS, the 80 LEAPS, we buy it for $36.85, close that. We can do them both at the same time. And then we can sell that October 125 call. It brings our price down to $34.56. So, and we do it every month, sell that call option against it. So that's how we place a poor man's covered call. It's a LEAPS option, and then we sell a call against it. All right, guys, I put a link down below for the free options workshop. Be sure and grab that. Remember to hit like and subscribe. Join Mumu. Get your 15 free stocks. Leave a comment, ask a question. I answer everyone. Let me know what you're trading. Thanks for watching. I'll see you in the next video.